Hello guys, and welcome back to another widely anticipated video, Elliott Waves on Cryptos. And it's been nearly 10 days since the last video. We haven't really seen much happening in the markets. We see a lot of stop handing above the ranges that we have seen over the past, I would probably say even a month. Nearly a month actually it's been that we have seen, we entered a consolidation. And we just remain in this sort of tight territory. Now, when we do see zones like this, and especially contracting, okay, this is a signal, okay, of an imminent breakout. Sometimes they lead to a forced breakout first and then reverse. Sometimes they just go straight to the direction that they should have gone in the first place. Now, which way is that? Of course, we don't know, but we're here to demystify using Elliott waves. We're going to see different scenarios, of course, the long-term and the short-term variations, also including the FTM. That has been the vote for the Quora Inner Cycle team that, I don't know, some sort of 20,000 people in there. So before, of course, going into the technical analysis, let's not forget, and as a reminder, that none of this is financial advice. You should do your own research always. I am here to help you demystify the technical intricacies, let's say. And before we head into the charts, let me also remind you that I do have a Discord channel. There is a free version, a paid version. There is information that you can find on the caption, how to contact, how to join the free channel, and just in case you think it would assist you, which I think it would. So BTC first, FTM second. We'll try to be as fast as possible and not boring. So let's buckle up. Okay guys, I'm starting with a clean slate chart, and we're going to start introducing slowly. We'll start with a long term, the scenarios. This is the main scenario still, although as you remember, I am becoming a bit more worried about the potential downside extension here. Okay, this is a big breakout, and we haven't returned to the previous range low. Okay, we have not returned that, which is an important could I say event or condition in the markets that pre-tells pretty much that there is an acceleration in the trend. So if we don't go above the 33k here, things are going to be likely more bearish, which brings us to the also highly probable alternate, which is the cycle degree of wave 5, of course, being done up here. For now though, let's quickly just have a quick look on what the expectation is here. We had wave 3, wave 4 was an expanded flat, wave W, excuse me, this is a double 3, right? We'll have an irregular X and an A B and a C. As you can see from wave C, 1 and 2, 3 and 4, and likely to head down to 5. I'm going to look at this price action, actually the different variations in a minute. So this is the main. I don't quite like the fact that our wave 2 lasts only a few days, whereas our wave 4 goes and goes without ending pretty much. So we need to finish around here, okay? Otherwise another scenario comes into play, and I will introduce that to you soon. Now, the alternative scenario, guys, it's that the cycle degree move ended up here. Okay, that was our 4. Okay, still a similar one to the expanded flat in 4. 1, 2, 3, 4, and 5. We've got A, we've got B, 1, 2, 3, 4, and 5. Okay, now This, you might ask, how is it different since we're just waiting one more leg down? It is different, first of all, because it is a cyclical end of a bear market, right? So which means that the move to the upside going from here, it's going to be massive because we're in a cycle wave 3, massive. Now, apart from that, why it's important to show you this alternative is that if we have already finished up here, indeed, there is potential for more downside. I know we expect only one more leg down, but in case this is going to be an ABC part of a cycle wave 2, then the likelihood of this being an extended move, it's more high than the likelihood of it not being if we would be on the W, X, and Y scenario. Okay, and let me show you here. We've got the A and the B. Okay, this one is pretty much done. I mean, we had 25 or something. That can literally, guys, take us down to 14K, 1450 or so. Yes, it would be an extended C wave, but as I said, it would be because, you know, we would be looking at a scenario where we are actually going down to these territories for the last time ever. Okay, so it would be an extended wave C. It wouldn't be a problem, and it wouldn't be necessarily you know, an impulse. But also we need to mention that and variation of this alternative is that that could turn out being 1, 2, 3, then 4, then 5 for wave A. Okay, let me show you one more time. 1, 2, 3, 4, 5. Okay, now if that happened, of course, that would mean, well, two things. It would mean it's gonna be wave A, we're gonna get wave B, and then we're gonna get wave C lower. I mean, we don't need to go to 10K, by the way, right? We can just finish here. 1, 2, 3, 4, and 5, and then B 1, 2, 3, 4, 5, and from there shoot higher. So that's one variation. The other one, if we're gonna go down in a 5-way move impulse, because as I said before, we haven't overlapped here, and I mean, even if we did overlap, it doesn't really matter in this particular case, because we'll be looking for the overlap of 1. But as long as we're below that level, we will remain bearish. Okay, what could be the case, guys, is that this being A, B, and C also for a flat. I would probably say, would it be an expanded? How do we know? We check the 105. And yes, it would be an expanded flat. So this is also another long-term scenario, guys, but it has a similar end to what I said before, 1441. So in this long-term scenario, we would have still a fourth wave. We would go down to 1440 because, I mean, you know, wave 1 is not going to be overlapped anyway, even down there. But as you well know, it would be just a very long wave 4. Okay, it would be a wave 4, by the way, not a 2, because we use this and this. So, and this is one. This is the second sort of cycle move I would be expecting. With this being an ABC, this being a wave X, and that would also turn out to an ABC. So that still has a similar downside, but it's just a different structure. Okay, and you might ask, how would it be different? It's not much different when we're looking at the expectation for downside, but when we go up, it would, according to guidelines, change the probability of our wave 4 being a W, X, and Y. So it could be perhaps just as an ABC, our wave 4, I repeat, right? So we're gonna find out in years probably. And then we also have the ending diagonal scenario here for the running flat, if you remember. Yeah, we still haven't overlapped that though. So in case we go higher to like 34, 36, which I expected for a while, the 36, because I had a gap here from the CME there, then I will be looking at this to turn into an ending diagonal in wave 4, okay, in wave C. So we need more upside in this particular case though, right? And then the other one would be part of triangle again, sorry, diagonal, but that would be in W, X, and Y, okay? And pretty much what we'll be looking here is for an A, B, and a C, and our wave C would be an ending diagonal, which means we're going to see much more upside, okay? And then 3, 4, and 5, and from there, continue up in 5, okay? So that's all there is for BTC. Now I'm going to take you quickly in the short term, okay? And look at this. Well, 1, 2, 3, 4 is done. We'll go down in 5. Okay, so we've done wave 1. We've done wave. Actually, we've not done wave 2. This is our wave 1. W, X, and Y in wave. In wave Y, but actually we've just fallen. So yeah, that happened just now. Sorry, we missed it, but it's okay. We'll probably move that over here, okay, and then we'd expect wave Y to end. So I think that might be scooped from down here, guys. It doesn't look like a breakout because I don't really see how this move from up here can really lead to an impulse to the downside. It's not a leading diagonal. It's just very hard to call this that, okay? So if we do fall, however, okay, it's not the end of the world. We have an alternative in the short term for this, the variation, okay? But for now, I'm probably looking at this ABC, ABC. Yeah, that's the problem, that we don't have a 5 here. Actually, we do have a 5 in BTC, so that could still be our W here, okay? So that would be like a running flat in W. So we'll be getting now a W, and we expect for wave Y to end higher, okay? It's not an ideal scenario when we think about macros, because the CPI came out at 40-year highs, and of course inflation getting out of control again, where the Fed members thinking that they have it under control. It's exactly the opposite. So that's going to add more pressure to the Fed, and they might be aggressive with 50 hikes both in July and September. And who knows, you know, that's probably not priced in. I don't think it's priced in. Yeah, two hikes in July, yes, priced in, but also 2 in September. No, I mean, there've been talks for the Fed to start pausing from September onwards. Now they're going to go for probably a double hike. So either way, that was just a quick parenthesis. ABC 1, 2, 3, 4, 5. For it could be a W, X, and Y here for 2, or it can also be an ABC for a flat. Okay, so we'll be looking for a low. ABC. Hold on. We'll probably look for 28.50 or so. That might be the low for over the weekend or so before we go up, okay? That, of course, based on the expectation over here. What wave Y can be? Well, first of all, W, X, and Y, it would be possible, by the way. So wave Y can be a zigzag, it can be a triangle, and it can be also a flat, okay? And I tend to think that we're going to see a triangle, okay? Because we're getting squeezed at different like portions of territories. It's just how it works right now. So yeah, we do have a fresh low, of course, for the day and probably for the week. Yeah, definitely for the week as well. So it might be scooped, and we might see like some sort of relief over the weekend. Now the variation, guys, is a W, X, and Y that is going to get us to have wave 4 here, right? So this is a wider triangle, which I like more because it makes more sense to be part of this sort of structure in W, X, and Y. a triangle here doesn't make much sense, you see, unless of course if it's already broken. So it could be, for example, WX, you got A, B, C, D, and E, and then we're moving lower. But as I said before, I just don't see how this can lead to a bearish market here, to an impulse at the downside. I just don't see it. It could perhaps be well, that is still correcting, which means that we'll go back in the short term, okay? And our wave Y, might be here or might be done even here as a triangle, okay? It makes no difference. Actually, it would be there. That extends our wave 4, okay? This is the main point here. And as wave 4 extends, it means that the chances of these, because they are up kind of synced, unsynced, going from here as 1 and 2 are increasing, okay? Just to be to give you all the perspectives here. Now, the second variation would be that we have had a triangle, or we're getting a triangle as an A, B, C, D, and E, and then we're going to get wave Y up, either in 4 or in 2, and from there start following, moving lower down, okay? And of course, I mean, you might ask if we're going to have a 5-wave move down here, right? And you'd be right. If we're going to have 5-wave move down here, I might as well just say that this is 1 and 2, right? And we're just going to continue higher, which is of course an alternative as well, but I just don't really think that the low is in, okay? So that's all on BTC, guys. Feel free to shoot questions on YouTube. And FTM. FTM things are a bit easier, okay, because it looks like the main is the main. In the long term, there's not many variations, but we'll just have some short-term sort of discrepancies. Let's just say in the price action here to give us the opportunity to give a bit more of more scenarios. So the idea has been for a while, guys, and you have been following me. You know that how on spot that has been. We're up at like, I don't know where. I think I remember last time we were around 80 and we said we're gonna go down. So we've got 1, 2, 3, 4, and 5, and A, B waiting for wave C. As you can clearly see, this is also an extended wave C, right? But let me show you something. Here we've had the 90% correction done, right? Which means this is a flat, ABC, ABC, 1, 2, 3, 4, and 5. So being a flat, it can extend to 1618 and perhaps lower. As you can see over here, we'll have very accelerated move to the downside. And even if we use the inverse Fibo, if it allows me, even if we use the inverse Fibo, that is very low, okay, very low. So guidelines, of course, are there to guide. But when we are onto a crypto bear market, guys, or going to, I don't know, I think it's a bear market here, 50 over 200 on the daily, then yes, wave C is expected to be very long. And don't forget that we've seen like crashes down to 90% and then picking up above all-time highs. What do you think this is, a WX and Y? No, it's an ABC with a very extended C, or a very extended A. So A, B, and C, to me, it's the idea. Okay, where can we go? Well, if we just use wave 2, one level to use, as you well know, is a 38.2, which we missed for a few cents here. Okay, so 20 is one of the levels. Then we'll go down to 7. Okay, of course you need to also look at the swing lows and stuff. 15 becomes a level, and while we're at it, we also look, of course, at the 1, 2, and 3, and supposed 4, because the assumption is that wave 4 is finished here. So we'll look for the 3 and the 4, and we'll try to find clusters. So, the 3 cents becomes an attractive cluster. But look at this, 19, 20 cents is the 38 Fibo retracement and the 38 extension of waves 1 through 4. on the downside. This is a big level, guys, at 20 cents. Also, we can assume it can do a double top with double bottom with wave 4. 4 and 4, Elliott wave, right? For those who understand, good. So we'll leave that here. We'll go a little bit further in, okay, and we'll look at the structure over here. So the assumption is we've got A, B triangle, and C, and wave 4 is done, okay? But let's be honest here, okay? I don't like how this moves down, and you don't like how this moves down either. It's not looking progressive. So it could be, of course, a case because it's not progressive because it doesn't need to be progressive. It might end up being an ending diagonal. That would be though a B, still we will need a C, and then something like this. So, you know, it still doesn't look pretty. What could be looking okay-ish would be something like this. Okay, oops, sorry, that slipped a bit. We could get a leading diagonal here, okay, and then you get 2, 3, 4, and 5, which gonna get us to at least the 20 cents. But also, I've got here, guys, some ideas in the short term. One would be double 3, okay, or a double zigzag. ABC, ABC for X, and then ABC for Y. That would be the double zigzag. The double 3 would be, well, this looks like a ABC already. So Y would be a triangle or a flat, okay, excuse me. And then we would have the actual triangle itself, but it would be on a bit of a larger sort of territory, taking more space here, as A and B would just be, you know, fitting in now nicely. And then you've got the ABC, which would be a flat correction, which means we would have to go down to at least the 24 and then start picking again, okay? And that would actually make a very good W, X, and Y as well. Okay, so guys, pretty much this is for the FTM as well. Now you might ask, what about some sort of alternative to the downside? Well, to be fair, I don't really have any. This is a very clear 5-wave structure, guys, and I mean, you know, it's missing one wave down at least. So you wanna ask me to make a truncation here just to enforce another alternative? I'm not gonna do it. You wanna tell me that you see something else? Please let me know. Maybe I am not, you know, maybe I'm looking blurry right now at the charts. So if you have a different idea, leave a comment, please. Go ahead, you're more than welcome. So that's gonna be all for these times, I would say, because it's not a week any longer. BTC and FTM analysis. Thank you for watching, guys. For likes, comments, feel free to engage.